Ladies and gentlemen, Tesla stock continues to move higher. Now, dare I say, tomorrow morning is critically important for markets. Okay. You need things to go right tomorrow. You have Walmart earnings, obviously important. A speech from Fed Jerome Powell, obviously important. Retail sales, obviously important. Initial jobless claims as well as PPI, which are less important but still play a role. If things go well tomorrow, which I will share with you all of the expectations Wall Street has, dare I say Tesla stock could start the process of a bit of a short squeeze. Yeah, I know, sounds crazy. But normally when this happens, when Tesla breaks above the 100-day moving average and sees its RSI go above 70, it normally rallies like a lot, okay? Back here in May of 2023, when Tesla broke the 100-day moving average and you broke above 70 on the RSI, Tesla went up 74%. In a more recent example would be here, okay? In July of 2024, Tesla broke above its 100-day moving average. RSI went above 70. The stock rallied 52%. Okay. Even more recent example was right around the election on November 4th. Tesla broke above its 100-day moving average October 23rd, technically, and ended up, I got to zoom out the chart here, ended up rallying from the break of the 100-day moving average to the high about 125%. If you want to take a rough ballpark average of that, you're looking at like 40-50% is the normal rally above the 100-day moving average. Now, those are moments where it's a bit of a short squeeze. Like it's momentum. Like you can obviously make a fundamental case for why the stock's rallied at those moments, and you can make a fundamental case for why the stock's rallying now and long-term valuations, and you can put all of the common knowledge to this you want. The fact of the matter is, with a break above the 100-day moving average and a move above 70 on the RSI, you tend to get some pretty extreme moves, okay? If you were to see a 40% move from the break of the 100-day moving average now, you're looking at about 456, roughly. Maybe you could say 455, okay? 50% break puts you basically at our previous high at about $488.18. Okay. I don't know if that's going to happen with any degree of, like would I bet the farm on that? Probably not. Okay. But history would suggest if things go right tomorrow and we do enter into a bit of that short squeeze territory with the RSI above 70, with a break of the 100-day moving average, it could get a lot more explosive to the upside than most people are expecting. $400 from the break of the 100-day moving average is only a move of 24%. Normally, we go a lot further than that. So you could be a $450 stock over the next couple of weeks. Again, if things go right. You can also see the S&P itself, I believe, wants to continue to move higher after breaking its 100-day moving average, with a little bit of what I would call consolidation today, gearing up for the data coming out tomorrow morning. Now, with that said, let's go ahead and go over the data coming out tomorrow morning. Now, PPI month over month tomorrow, I think, is the lesser of the catalyst. Okay, this data is all for April, by the way, besides initial jobless claims for last week. PPI month over month is expected at 0.2%. Don't really think that matters as long as it doesn't come in really high. It's really going to be about retail sales, okay? Because retail sales, personal spending, that is like 70+% of the economy. People spending money. So if people slow down or stop spending money, that's bad, okay? Now, the good news is the expectation is really low tomorrow. So last month in April, you were positive 1.5%. So when you're comparing month over month, that would be like no growth over 2 months. Okay, basically flat if it comes in at 0. So you're not expecting any change on a month-over-month basis. Well, if it comes in negative, that would be, worse. Okay, 0%, not a terrible number because last month was so strong. Okay, if it comes in positive, then that's really good. Let's say positive 0.3, 0.4, 0.5, something like that. And I think Wall Street would really like that because that shows the consumer is continuing to spend and the odds of a recession likely, come down at that point. Now, core PPI month over month is expected at 0.3%. Again, as long as that's not really high, I don't think that is too big of a, hiccup that markets couldn't get over. Initial jobless claims are expected at 229,000. They've been in this range most weeks. As long as you don't get some kind of blowout number to the upside, I don't think we're going to care about that. If the number comes in low, that's going to be good. You do have New York Empire State Manufacturing that's expected to come in worse than last month. Come in at -10 is the expectation. The Philadelphia Fed Manufacturing Index is expected at -11. Last month was -26.4, so that's expected to get better but still be negative. You get retail sales control group month over month, expecting that to be positive 0.3%, and retail sales excluding autos month over month, which is something Wall Street actually, does pay attention to as a subcomponent of retail sales, is expected at positive 0.3%, down about 50% from last month's positive 0.6%. So expecting a slowdown across the board. If we don't get that slowdown or it's not as bad as expected, that is it's going to be a really positive catalyst for markets. Now, we also have a speech at 8:40 in the morning tomorrow from Jerome Powell. Okay, so you're going to wake up with quotes coming out from this Powell speech. What we really want to know is, does a China deal change anything for Powell? Powell's not going to get too far ahead of that. He's not going to draw conclusions that the deal's done or anything like that. But if he says anything along the lines of, if the current trade environment holds with certain proposals that we've heard, maybe that could allow the Fed to cut rates sooner. Maybe there wouldn't be as much inflation associated with that. Okay? Or associated with that. That would be one headline that I think would be very positive. Overall, we've seen positive developments with trade, and we are expecting more trade deals to be announced and signed soon. Japan, South Korea, and India are the countries that are speculated to sign trade deals. And that's going to give the Fed, a little bit more certainty. Whether Powell acknowledges that or not, in how that changes the path for the Fed, that is what is going to move markets with that speech from Powell tomorrow morning. Okay, so that's going to be huge. And it's kind of a sleeper catalyst here because not a lot of people know Jerome Powell is going to be speaking tomorrow. So might catch Wall Street a little off guards, if you will. It's kind of at a weird time, 8:40 in the morning. Normally, Powell doesn't speak that early. You will get industrial production month over month, manufacturing production month over month, year over year numbers for both of those as well. You will get the NAHB Housing Market Index that is expected to be unchanged from last month. And then Fed Bar speaks at 2 p.m. But really, after your data and after the speech from Powell, that's going to determine what happens with the trading day tomorrow. Also, big catalyst, Walmart earnings. Now, again, as I've said before, in 07, 08, Walmart was one of the first companies to warn about the consumer and trouble ahead. And, stocks sold off like 3%. I think this was September 2007, maybe March. It was at some point. Doesn't really matter. It was before everything went south, okay? Like a good year before everything went south. Walmart started to warn about the consumer. And it was something you probably should have paid more attention to back then. Now, Walmart has had good earnings. They've benefited from a weaker consumer shopping at Walmart instead of Target and other more expensive retailers. So you really want to see what Walmart executives have to say about the consumer and about shifting activity. Is discretionary picking up a little bit? Is it still weak? Doesn't matter as much. Is staples and food, how are those sales doing? Are people just cutting back in general? Walmart's going to tell us in real time what the consumer is doing. And I think that could actually be a big catalyst for tomorrow. For that reason, we're all trying to figure out, is the economy going to slow down? Is the consumer slowing down? Are we going into a recession? And Walmart, I think, gives us a little bit more real-time guidance to go off of. And I believe Walmart's always macro catalyst for markets when they report. But I think even more so this time around when there is so much uncertainty and so much of Wall Street is really on the sidelines of this market. Like, retail investors have been the ones to really profit from this recovery so far. It hasn't been big money. And big money could start to pile in and honestly start covering on a lot of their short positions. They're still heavily short this market and still very much fearful. And Walmart earnings, a speech from Powell, retail sales, if those things come in good and there's not anything bad to say, I don't know how you could have a bear case on this market for at least the foreseeable future until something changes or gets worse. It would be really hard to be bearish on this market. Now that's from I'm a bull right now, so that's from my perspective. I think you want to be long this market. Now, if things are bad, if they're not as good as expected, I would think the markets would trade down to that 100-day moving average over the next couple of days. That is about 576 on the SPY. That would be a move lower of 2.2%. Now, I also think it's important to, one, know what the short position looks like, what hedge funds and institutions have been doing is as far as options and short positions, all of that, blah, blah, blah. But I think it's important that we all understand once and for all how markets have changed just in the past week, okay? Getting this China trade deal lowers the odds of an inflation problem, raises the odds the Fed is going to cut rates, which is obviously good news for Tesla. Specifically for Tesla, it lowers the odds of a Chinese boycott against U.S. products or against Tesla's, which is Tesla's biggest market. That would obviously be a disaster or could have been a disaster. Looks like that's not going to happen now. Okay. Even, to get into the nitty gritty of the trade deal, it looks like China is going to be encouraging their citizens to consume more, which puts U.S. companies doing business in China in a great position. That is not just Tesla, that's Nike, Starbucks, Apple, to just name a couple of others. But this trade deal also lowers the odds of a recession, which, uniformly would damage Tesla more, right? Tesla stock, because Tesla's a high beta stock. Auto companies are just historically do not do well during recessions for obvious reasons. So this China trade deal, or the framework of this, the pause on tariffs, alleviates those issues. And I do think, furthermore, the China tariffs are going to fall from 30% to 10%. I think there's probably going to be a pause on the 20% fentanyl tariff as well as China starts to actually crack down on this. So from a macro perspective, there's a lot of positive things going on that are a positive force on Tesla. But there's other things internally at Tesla that are positive. Okay, Elon Musk back at Tesla, or coming back to Tesla very soon to spend more of his time at Tesla. Robotaxi is launching over the next couple of weeks. Obviously a positive. Optimus seems to be getting a little bit more attention these days. And hedge funds and institutions are very underpositioned in Tesla. Mix that with a sharp drop in really investor sentiment around Tesla that has still not recovered. So, that's important from a kind of momentum perspective, a positioning perspective. When everyone gets bearish on a stock, it takes some time for people to get, bullish on the stock again. That's why you tend to see analysts that downgrade stocks when they're falling and then chase when they start to do well again, right? Analysts start to come out and raise targets and raise targets and raise targets, and then they'll just slash them right back down, okay? Again, investor sentiment and positioning are also important to acknowledge in Tesla. And I think all of these things are positive factors. So internally at Tesla, and kind of mix that with earnings estimates and delivery estimates that have come down in the past couple of weeks and months, it's going to be a lot easier for Tesla to actually beat on earnings, right? From a more fundamental perspective. So there's a lot going on positive at Tesla. There's a lot going on positive in the broader markets. Mix the two together, I'm not surprised Tesla is up over 3% today, and the headline S&P really did nothing. Like, Tesla outperformed the headline S&P by like 30x today. That's a crazy outperformance. Okay, now look at option activity from hedge funds and institutions. You have 263 different trades today, totaling $531 million with a positive order value of 93%. 93% positive on $531 million. That's crazy. Meaning, if you had a $100 bill to spend on options, 93 of those dollars are going out and buying upside positions on Tesla, betting that the stock stays where it is or goes higher. Okay, only $7 of that 100 is going towards downside positions. So hedge funds and institutions in the options market today, seem to be very bullish on Tesla. Okay, you can, again, the outperformance in Tesla kind of highlights that. But you do still have a very high short interest as well. Now, when I say very high, you got to put it into context. This is not GameStop level short interest, not even close. It's about 3% short. But 3% short on $1 trillion+ stock or company equals about $27 billion. That's a lot. Okay, short sellers went from only shorting about $16 billion worth of Tesla at some of the March, April lows, now at $27 billion. So they've lost over $10 billion just in this recent rally. And again, with things sharply changing to be more positive from a macro backdrop in markets, there's no reason to still be short in Tesla. That makes no logical sense to me, again, considering what's going on positively in the Tesla business. Okay, here today you have 841,000 shares that are being covered on. Again, not super surprising. Any hedge fund in their right mind, if they were short in Tesla right now, would be exiting those short positions. But I do think this could very well continue, especially if tomorrow's economic data comes in good. And by good, meaning the economy is doing good, right? Retail sales come in good. Maybe Powell suggests that, he's not going to confirm this, but suggests if a China trade deal does come about faster, or trade deals come about in general faster, that would make them more open to cutting rates, or at least surveying what the inflation picture looks like. So again, I think there's a lot of reasons to be optimistic here. Tesla could even break into the 400s with a bit of a short squeeze. That is at least what history suggests. When you break above the 100-day moving average and the RSI goes above 70 at the same time. So let me know your thoughts on this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.